Let me paint you a picture. It's Thursday night, you've got $23 in your bank account, and payday isn't until tomorrow. Your kid needs lunch money. The gaslight in your par just blinked on, and somewhere in the back of your mind, you're doing this exhausting, humiliating math. Which fire do I put out first? Which one can I let burn just a little bit longer? If you've been there, you know that feeling. And I want to tell you something you may have never heard. You're not lazy. You're not irresponsible. You are not bad with money. You are being charged extra for being poor. And nobody, not your high school economics teacher, not your employer, not the news, nobody sat you down and explained that the entire financial architecture of this country is engineered to extract maximum value from the people who can least afford it. Think about that. The moment you fall behind, the moment life happens, and it always happens, the system doesn't give you a hand up, it hits you with a bill for falling down. Late on rent? That's a fee. Overdraft your account by $2? That's a $35 fee. Can't afford the family-size box of cereal? You'll pay nearly double the price per ounce for the small one. Can't get a loan from a bank because your credit isn't perfect? Don't worry, there's a payday lender on the corner smiling as they sign you up for a loan with a 400% interest rate. This isn't a series of unfortunate events. This isn't a glitch in the matrix. This is the design. Today, we are pulling back the curtain on this design, this hidden, punishing surcharge on poverty. We're calling it what it is, the broke tax, because once you see it, you cannot unsee it. Let's start where everyone feels it, the grocery store. Walk into a warehouse club like Costco with $300 and you can walk out with enough chicken, rice, and toilet paper to last a family for a month or more. Your cost per meal might be $1.50. You've achieved efficiency. You've used your capital to lower your cost of living. Now, walk into a corner store or a dollar store with $20 because that's all you have until Friday. You're not buying in bulk, you're buying in survival portions. A small bottle of cooking oil, a single roll of paper towels, a travel-sized detergent. That small bottle of oil, per ounce, it can cost 3 times more than the giant jug at Costco. That single paper towel roll costs more per sheet than the 12-pack at a big box store. You are paying a premium for your lack of capital. Economists call this the poverty premium. Studies show that families in poverty-stricken areas can pay up to 18% more for the same basket of food. Your personal inflation rate is higher than a wealthy person's, not because of the global economy, but because your financial reality forces you into the least efficient purchasing decisions possible. Rich people don't just have more money, they pay less per unit for everything they consume. Now let's talk about banking, because this part is diabolical. If you are wealthy, banks pay you to store your money with them. You get high-yield savings accounts, interest-bearing checking, investment dividends. Your money is making money while you sleep. But if you're broke, banks charge you for the privilege of holding what little you have, or they punish you for not having enough. Overdraft fees are a prime example. While some banks have made changes, the average overdraft fee in early 2025 was still nearly $27. A single miscalculation, a $3 coffee that hits before your deposit clears, can suddenly become a $38 hole in your account. In 2024, American consumers paid over $12 billion in these fees alone. Some banks were even caught processing daily transactions from largest to smallest, a practice that seems designed specifically to trigger the maximum number of overdraft fees in a single day. Don't have the $500 minimum balance? That's a monthly maintenance fee. Can't afford a bank account at all? Now you're one of the millions of unbanked Americans. You rely on check cashing services that skim 1 to 5% off the top of every single paycheck just to access your own money. An unbanked person could spend as much as $40,000 in these fees over their lifetime. The system isn't broken, it's working exactly as intended, siphoning wealth from the bottom and pumping it directly to the top. Here's one that makes my blood boil: housing. If you have money and good credit, you buy a home. Your monthly mortgage payment is an investment. It builds equity. You are slowly but surely buying an asset. After 30 years, you own something worth hundreds of thousands of dollars, a cornerstone of generational wealth. If you're broke, you rent. Every dollar you pay to your landlord vanishes. It builds their equity, not yours. You own nothing at the end. And because demand is high, your rent can be raised every single year, pushing you closer to the edge. The wealth gap this creates is staggering. In 2025, the typical US homeowner had an average net worth of over $400,000. The average renter, $10,000. That's a 43-fold difference in wealth. But the broke tax on housing goes deeper than just rent. It's about your zip code. Poorer neighborhoods are often food deserts with fewer grocery stores and more liquor stores. They also have higher car insurance rates. Yes, your insurance company looks at where you park your car at night and charges you more based on your neighbors, even if you have a perfect driving record. Drivers in lower income zip codes can pay hundreds of dollars more per year than identical drivers in wealthier areas. It's a cage built from math. You're penalized for living in a poor zip code, but you can't save enough to move out because you're paying the broke tax on everything else. Let me hit you with a number: 391%. That is the average annual percentage rate, the APR, and a payday loan in America. 391%. Your car breaks down. The repair is $300. You need the car to get to the job that pays you. You don't have the cash. The bank won't give you a personal loan because your credit score isn't high enough. So you walk into the payday loan store, you borrow $300. 2 weeks later, when you get paid, you owe $345. Can't pay it all back? No problem, they say. We'll just roll it over and over and over. The Consumer Financial Protection Bureau found that a typical borrower ends up paying $520 in fees to borrow just $375. Meanwhile, your coworker with excellent credit faces the same car repair. They open one of the half dozen 0% introductory APR credit card offers they got in the mail, charge the repair, and pay it off over 60 days without a single penny of interest. We're told that credit scores measure financial responsibility. That's not the whole truth. What they really measure is access. Access to wealth, to opportunity, to a safety net. If you start your adult life with no one to co-sign a loan, no family history of credit, you begin on the highest difficulty setting, destined to pay double or triple-digit interest rates for necessities that others get for free. Finally, there's the one part of the broke tax nobody talks about: the cost of exhaustion. Being poor is a full-time job you don't get paid for. It is mentally and physically draining. You spend hours on public transit instead of minutes in a car. You spend hours in line at government offices because you can't afford an accountant or a lawyer. You spend hours comparison shopping, agonizing over every purchase because one mistake can derail your entire month. This creates a state of constant, low-grade stress that scientists call cognitive load or decision fatigue, and it has a measurable cost. Studies have shown that people forced to spend immense mental energy worrying about scarcity perform significantly worse on cognitive tasks. The mental bandwidth required to constantly manage a state of financial precarity is so great that it's been compared to losing a full night of sleep or a drop of 13 IQ points. So not only are you working harder for less money and paying more for basic necessities, but the sheer stress of your situation literally reduces your brain's capacity to plan, to strategize, to find a way out. The broke tax doesn't just empty your wallet, it taxes your mind. So what do we do? Where is the hope in all of this? First, and this is the most important step, is to recognize that this is not a personal failure. This is a structural one. You are not alone. You are not your credit score. You are a person navigating a system that was not built for your success. Giving yourself that grace is the first step towards reclaiming your power. Second, knowledge breaks cycles. Understanding how the broke tax works allows you to spot the traps. Maybe it means finding a local credit union, which is a nonprofit, is far less likely to hit you with predatory fees. Maybe it's finding a food co-op to lower grocery bills, or using a free financial empowerment center to get one-on-one counseling. These alternatives exist, but they are often drowned out by the billion-dollar marketing budgets of the predatory players. And third, we have to get loud about it. We have to change the conversation from one of personal shame to one of systemic injustice. Most people suffering under the weight of the broke tax thinks it's their fault. It is not. By sharing this knowledge, by talking openly about these hidden costs, we take the power away from the shame. We start to recognize that if we're all running on a treadmill and falling behind, maybe the problem isn't our running. Maybe the problem is the machine. And maybe it's time we redesigned the machine.